are developing our understanding of the markets, part of our education, to get to the point where extracting profits from these markets on a consistent fashion really comes down to a big part of understanding is what the outcome is, which outcome is more likely than another outcome, right? If thens. That's really the foundational thing about markets. There can be so many outcomes in any market, and it's never set in stone which one will win out. But if the market goes up, goes down, or it's trading sideways, those are really the three options that we can be in. And obviously, right now we're in a very up market, but the strength is not very robust to this trader. So, like any business, 80% of your money is made 20% of the time, and it's really no different in the trading business. It is not the type of business that you can come in and expect to extract an exact paycheck every week like you would a job. It just doesn't work that way. But if you're good with waiting for the right setups and being patient and defining your time frames, these are the important things that matter when you're looking at developing a trading method. So I think it's really important to discern what is more likely to happen and then go from there, and then that will give you confidence in this game. And really, profits ultimately come from confidence, not the mastery of charts. You could look at charts all day, but ultimately it comes down to, are you confident in your style? And with that, there's a bazillion people that are out there on TikTok and everywhere else showing you charts, right? And it's just not that easy. It's not plug and play. And I know they want you to think that, but it's just, there's a lot of context and nuance. And the profits really do come from having confidence in yourself and in your strategies. So keep this in mind. And I think this will help you when you're trying to discern and separate yourself from the noise. And there's so much noise. Again, no chartist is perfect. And I think really the thing that you need to look at when you're setting up also comes along with the charting, and understanding setups. The second most important is, what time frame do you want to play on? And for me, like I said, it's exhausting to scalp because you truly have to take losses all day. And I don't mind taking losses, but I'd rather take one or two losses a week and then have 4 or 5 winning trades. And that works out for me. And then, so my time frames tend to be a little bit longer. They could be anywhere from a day if I got lucky, but that's usually lucky, up to 2 to 6 weeks. That's typically my confident time frame to trade in. If you look at the trades that we've talked about recently, whether it's Boyle, whether it's oil, whether it's CoreWeave, all these things had big moves, and they happened relatively quickly, but it wasn't in a day, and I wasn't expecting them to come in a day. So you really have to set your expectations based on the time frame, and don't confuse time frames. In other words, if you're day trading, then swing trading probably doesn't matter to you. But if I'm not day trading, then day trading really doesn't matter to me. And in a market like this where the SPOs are 11 points wide, I don't want to day trade. It's just too hard. You've got 11 points in a 1% move is 66. That means you're not even 0.2 wide again. So why try to play that game? Why try to again extract juice from a turn-up that doesn't exist? So in an intraday strategy, I would never risk 20 to 30% heat on a trade, but on a longer-term trade, I might be willing to, because I'm not expecting the move necessarily to come tomorrow. And if I want to build into a position, I'm okay sometimes with that type of that type of down draft in that type of position. So if I'm planning on being in the trade for a year or two. So that's the other thing you have to also focus on, is what is the time frame that you're going to behave on, and what will you do in that time frame, and what are your risk parameters with that? So, and then the other thing that I wanted to kind of point out for the newer traders out there, if you're relying on excessive indicators and stochastics and RSI, blah, blah, they're all the same. Like, they're all backward looking, not really forward facing. So you have to, understand that you can put all this, but you see on my charts, I've got order flow and I've got price and I've got a moving average. That's all I use. That's primarily all I need to do to behave and how I want to work in the market. So I just wanted to point out these things. Time frames are important. We'll just make sure that you're trading within the parameters of your own self, and don't worry what other people are doing. All right. So I know that sounds funny, but that's exactly what it is. You got to figure out your own strategies. I can tell you exactly what I do, and I lay it out here, but it doesn't mean you're going to do it the same way. So I've just seen it over the years. I've had hundreds of traders come through my office and trade with me and want to learn. And you ultimately have to find something that works for your mentality and for your time frame and for your capital base. Otherwise, it's not going to work. And nobody can do that but you. So keep that in mind. It's a confidence game. Get that confidence going by getting good setups one at a time. I have a million types of setups. That doesn't mean I'm going to talk about them all every day. That comes with time in front of screens. The confidence comes that way. And it comes from earning profits, but then taking losing trades and then moving on to the next trade and going, okay, let's just add that to the pile. But the net, up is what you want to do. So again, I'm not a scalper. I'm not an overtrader. It takes too much discipline. I don't have it. I don't want to do that type of trading every day, and I don't want to sit in front of a screen. So define what type of trader you are and go from there.